Okay, good evening officially, and welcome to the Market Watch Group working sessions, the Trading Foundation's working sessions. This is our beginners block. All are welcome, just like all are welcome in the intermediate advanced block, but I'm going to absolutely go slowly, methodically. We're going to get into the granular. We're going to ask questions. We're going to stop, pause, check in, etc. And obviously, these are recorded and posted. I'm going to be posting these just in YouTube and on the announcements. So I'm just going to pop them in there and say, here's tonight's beginner recording. Here's tonight's intermediate advanced recording. Enjoy. All right, so let's get into this. Here's the disclaimers. As always, education, illustration, yada, yada, yada. Pause it, watch it if you're interested. And now what? To the platform. There's no agenda. There's no agenda here. We're in free form. We're here to discover some things. Let me get back to where I can see you guys. I don't know why. There we go. The last session on 6/27, was that Thursday? I have to look and see. I thought I did the advance, but I can't remember if Glenn sent me his. Let me look and see, Lee, and I'll make sure to update that for sure. And we're going to get those real time going forward. So anyways, all right, let's talk about it. What do we need to know? Why am I in full screen mode here? There's that. And there's that. Okay. All right. Good evening, Don. Glad you can make it. You're just in time. We're just getting going. So if you have something that you're trading, that you're thinking of trading, that you're like, I'm not sure, throw it at me. Throw it at me and let me know. But otherwise, let's just kind of take this real time. It's Tuesday. Now, the market's going to close Thursday, half day tomorrow. It's a half day tomorrow. That's all right. Glenn's going to just come in. We'll just have if you want to come in tomorrow, I believe it's a half day. Does that sound right? I believe it's a half day. I got to keep better track of my market holidays. I know it's closed Thursday. Nothing's happening Thursday. Everything's been closed. So we're doing back-to-back foundations. Thursday is not being pushed to the weekend. It's being pushed up to Wednesday. So boom, boom. Glenn will be here tomorrow night at 6 o'clock. I'll be here at 6:45. My time, Mountain Time. That's 8 o'clock Eastern, 8:45 Eastern. Okay, so what are we? We're 5.75. Now, for beginners, and if you haven't been with us for very long, you might be like, I'm not really sure contextually what that means yet. We will absolutely bring that up. I'm glad you threw it at me. So where you might not be like, well, what is a 5? Because the score is a range from -10 to +10, but it really doesn't get above or below the 7s. I mean, I can't think of a time. And one of the reasons why is because I'm very reluctant to ever score something at its absolute highest point. The reason why is because if I score something at its highest point, I can't score it any higher. If it gets better, what can I do? It's better, but I can't really reflect that. So, right now, -1.5 to +1.5, that's neutral. 1.5 to 3, starting to get bullish. 3 to 5, that's 3 to 6 is bullish. 6, 7 is very bullish. Vice versa to the downside, just to kind of give you a little sense. So 5.75 is a good score. We have good long-term trend in place. The institutions are stable. We have a good short-term trend in place. The traders have momentum. Buyers continue to show more than the sellers. The sector rotation shows money flowing into growth sectors. The VIX shows us that there's not a lot of fear in the market. All of these conditions lead us to this place. Great, we're bullish. Now what? Well, the core philosophy is find a bull market, buy the dips. And that is our core philosophy. This is one right here. We actually did this. I'll post the recording because we actually built this trade on Thursday. This is Thursday. We built a trade that actually triggered on Friday. Bing, triggered probably right around here somewhere. No, probably right around here somewhere. And then pulled back. And then the next day good, and today good. And that trade is working, so you can see what does that look like. Okay, well, we don't want to use that necessarily as an example now, so we'll go through our watch list. Let's start with Don. Let's start with Ford. What do we have with Ford? A breakout, first of all, which is great. That was a tough one. If you caught that, that's a good trade. It was very sluggish through here. And it never really gave much of an indication. It went up and it just sort of paused and then bam. And you'll notice that right here when it popped out of that line, volume. But what's happening to the volume? What's happening to the candles? And where do I maybe have, it's not too straight, but kind of straight, right? So yeah, I'm concerned that we have an old resistance level approaching, that we have a big candle, medium candle, small candle, big volume, medium volume, small volume, which tells us what? It tells us that the buyers seem to be drying up a little bit. Now, anything can happen at any given time, but if this was a short-term trade, I would start thinking, you know what? If it gets to 13, I'm going to sell at least something. A third, a quarter, a half. Profit ready to be pulled for the holiday. Yeah, maybe tomorrow, right? Yeah, great. And that's it. You have a holiday, and then you have Friday, and then it's the weekend, and right. So these are the things that are happening. So hey, Steven, good to see you. Did I already say hello? Maybe I already said hello. If I did, sorry. Yes. So how much further, Don? That's a great question. Now, one other perspective that we might find useful here. These Heikin Ashi are great to, you know, if you decide, hey, I want to see if it can keep running. So maybe I'm going to set a profit target through here somewhere. You can see it got as high as close to 13.25. So maybe you say when it gets in there, I'm going to sell just a piece, but I'm going to see if it just keeps on going. Maybe it does keep going up here into this level, right? Well, I can also be adjusting my stop loss. I put it here for the next day. I put it here for the next day. I put it here for tomorrow. And then when the new candle comes, which will be somewhere around here, I'll put it here. And if it slows down and it starts to turn over, you'll notice it looks like this. See the same kind of a progression. Big, small, smaller, and then red. And then you're like, yeah, that's it. I'm done here. So we have a couple of different ways that we can manage this, that we can keep our eye on it, try to let the profit run, but let's be pragmatic. We don't just think it's just going to start dropping money into our account. We think, hey, I'm going to have to earn it. I'm going to have to work for it. I'm going to have to be ready. So give me your thoughts. Oh, sorry, Don, that wasn't yours. That was Dan's. I mixed up. I apologize to both of you. So Dan, there you go. And if anyone else has a trade, throw it at me. Let's talk about it. Hey, Billy Ray, good to see you, sir. That's a great one. So if you guys are managing trades, yeah, let's talk about it. Where's your, right? People are like, sometimes you'll find people that are, I'm just talking about what I see. I'm not telling somebody what to do here. I didn't say, here's what you should do. I say, here's some things you can consider, some options that you can take. Definitely the trail as it's broken out, right? That definitely is like, let's not let this thing now reverse on us. Let's make sure that we take advantage and lock some gains in. There you go. All right. Love it. If anyone else has a new trade that they're managing, let me know. Otherwise, let's get to the watch list and see if there's something new that's worth us taking into consideration. Now, we have a couple of trades. We had an alert on Apple. Apple moved, paused. We talked about this. We said we're not in a great place, but as long as it doesn't go below this, and it didn't, and then now it's moving great. This is still fine. So we had an alert come out on this trade. I believe it was back here. Now we're seeing some good movement. AMD, I'm not sure yet, but maybe. Amazon's been on our or AVGO. No, what am I on here? Amazon. I don't see one yet. I think we're going to find one. AVGO, we did that in a video already. You can go back and watch that one. AXP, that's been on our list. Ooh, Colgate-Palmolive. That's a maybe. Now, you'll notice we had this pullback going on here, and then today we got this first white candle, a little bit of a pinch down here. I'll tell you what, yesterday's big red candle would have been scary, except for the fact that there was no volume accompanying it. Yeah, this is a setup for me. What am I thinking about here? I'm thinking to myself, probably this midpoint, which is about today's high. If we start to take this out at the end of tomorrow, yeah, that's a valid looking signal right there. So this is what I have. I have a strong stock in a bullish sector that is in a setup. A setup. What is the setup? We just made a new high. Now you can see that the stochastics has flattened out and it turned into the selling cycle. We're in the selling cycle right here to wherever, right? And that's what we're keeping an eye on and we're waiting for. So I'm going to say that's close. I'm going to keep going through the list, but tell me if you have one you want me to consider. CMG. Maybe. Not quite yet, though. Costco. Costco was another one that we gave a signal on. Where did the signal come? Right there. What happened? The stochastics crossed right there. And you might think, Scott, that signal didn't work. It's still working. It moved and then it paused and it did a little hiccup. But you'll notice what? It never went wrong. My stop is down here somewhere. It never went wrong. And I said, I'm going to give it the opportunity. It got close. Sweating bullets. It got close. And now what? And now all of a sudden, didn't have a lot of volume, but we got this engulfing. And now I'm going to see, can this now catch what it's trying to catch? Sometimes it takes a little time before things get moving. Sometimes it gives a little start, stop. And then it goes. Don't get impatient. Remember this. You're a 5 points out. Well, I am. I'm a 5. You're what you are, and maybe relying on me for the time being. If I was a 2 and I saw that turnover over the last few days, I'd probably be like, yeah, I'm out of here. I can't risk it. I'm in a 2 market. A 2. It's not a good market. It's not great conditions. In not good conditions and not a good market. Yeah, right? No. What else? But here, because I'm bullish, it gives me extra ability to stay in the trade. Now, not forever, right? This is it. At this point, it's either going or I'm going to move my stop up. And if tomorrow it gives me something like this, I'm going to move my stop up. And I'm going to start that same trail process. It's got to go. Right or wrong now. I've given it enough time. I gave it enough opportunity right here to not whip me out of the trade. Okay, let's go. EQH. I'd say this is viable. Hasn't given the Heiken Ashi yet, but I would still be comfortable not putting my stop way below the red, but at least just below this last one here. And that's a low of 40. I mean, I'd probably put a stop at 40.35 at most. 0.5% below this low. Maybe even tighter than that. 40. What's the low? 40.35. Okay. 40.35. So about $1. Can I get at least 2? Maybe 3. 2 puts me here. 3 puts me here. Maybe. I might stick with Colgate for now, and we'll build it as a intended trade that needs to trigger. You'll see what I mean when we get there. I'm going to keep going through these. Wait, let me get back to regular candles. Heiken Ashi is only for confirmation, not to start the analysis. Sometimes people get a little greedy with what they think these can do. GE. I'm thinking about it. Everyone's like, it's flat. It's flat. I get it, but it made a higher low. I'm thinking about it. Google. I like Google. Yeah. Google looks like a flag pattern to me. What does that mean? It means we have this pull, a little bit of a flag popping out. So I could, basically end up with a stop here. That's my risk. And I'm hoping to catch at least something like that again. So I should have at least 2.5 to 1. That full move, 175 to 186. It's about 12. I'd say about 10 points left. 195 target. 195 target and a stop at 181. Well, risk 4 to make 10. I don't know. 2.5 to 1, and it's Google. I think there's potential there. Hims. People have talked about that one. We'll see. I don't know about for me. Coca-Cola is getting close, but not quite. Meta. I think Meta looks good, just like Google. They both look strong. Market leaders. Morgan Stanley. I told you guys, I said, watch the financials. We got to be ready. I hope you caught at least 1 or 2 pieces of financials, and they're starting to move here. Microsoft continuing to move. Micron. A lot of good stuff out there. If you like chips, I think Micron is viable. PLTR, I'm starting to scale out of that one. TSM, I like Micron better. Nvidia, I like Micron, but I like Micron the best of the chips right now. I like Micron the best of the chips. I think that looks viable. Give me your thoughts. Agree, disagree? Bank of America is finally making a little move. There you go, right? Apple continues. Costco. My patience on Costco, right? Hopefully, me holding into Costco, Steven holding on to Bank of America is enabled, right? That's enabled by the market conditions. The read of our conditions are instrumental into helping us to make these kinds of decisions. Okay, so yeah, Micron. Here's the thing I like about Micron. It's a big drop. So I'm like, I don't know if this thing is like going to make a higher high from here. I don't need it. Let's just say same high, 157.5. Same high. That's my target. Same high. I also have this right through here, this little resistance point at around, let's call that 145. So we're about 157.5, right? So what do we have here? We have a setup and a possible trigger. Setup is the fact that I have a strong stock and a strong sector, just made a higher high, and now it's pulling back. Buy the dip when you're sure that it's done dipping. So now we're waiting for what? The trigger, the confirmation. Is it a candle? Is it the stochastics? Is it both? Is it, right? Is it price crossing a certain level? Could be a number of things. Every trader is going to be a little different with that. You might start by saying, hey, I'm going to just start by using the stochastics. When it crosses, I'm in. And then you might start to see patterns where you're like, you know what, I might do it a little differently. Great. So I'm going to say 145 is here. Let's just kind of assume this entry. Yeah. So that's about 132.5 on the entry. Okay. So what do I have to work with here? Well, I've got 12.5 from here to here. Another 12.5 from here to here. 25 total, right? So my my R to R, my reward to risk, 25. Now what? Now I have to have a stop loss. Well, I have a good candle, but maybe I get this thing right underneath here, below that hammer. The low of that day is 127.27. Okay, let's go 0.5% below that would maybe put us another 60. So let's put it at 126.50. Okay, 126.50. We'll call that. I like that. Let's go 126. Now as you all know, what it was, but let's just keep building this trade. Okay, and I hope it stays with me. Now, where were we? We were looking at a stop loss. For the stop loss, we said, I might even put this out as a trade alert. So be looking for that. How about that? 125.99. That's what we said, right? No round numbers. 125.99. Okay. Okay. So what does that give us here? 5. So we've got about 9 points of risk. And we've got 25 total in potential gain. Right? 25. We'll move this over here. No, that's not even 9, is it? 126. I'm wrong. That's bad math, Scott. That's 650. That's 650. Oh, Scott. Trying to give bad math. Did it just pay a dividend? It's paying an 11-cent dividend soon, so I'm not too worried about that. And it reported earnings back here. Those are the two corporate events that happened. Yes, I'm still recording, and I'll go in there and I'll delete the blank space. And we're just going to probably carry on. I mean, we're obviously into the advanced, so if anyone came for that, it looks like it's the same people. So look, we're here, we're working, we're trading. Let's just stick with it and hope that I don't lose my sound again. Do you have any questions so far about my numbers? This is my stop loss down here, 126-ish. My entry around 132.5. That's where the 6.5 risk is coming from. 2 targets. The first one, 6.5. So I'm getting almost 2 to 1. I'm getting almost 2 to 1 on the first target. Almost 4 to 1 on the second target. Yeah? Beautiful. Beautiful. Let's stop. Let's pause. Any questions, any comments, any concerns? I'm a little worried. Steven's hand is up. Steven, your hand is up. Graylin, welcome. Good to see you again. Doug, good to see you. I apologize that you came into silence. But we're live. This is beginners. This is it. What do we have? This is a stock on our watch list. It's bullish. We're bullish. We're thinking about it. If you're gonna think about a trade, this is what you should have: a setup, a trigger, a stop loss, a target, a take profit level of some kind. And that helps us to establish reward on the upside, risk on the downside. You can see that it's helping us to start establishing a plan, right? What am I going to do? Well, if it goes up and it gets, I'm going to do this as a stock. Excuse me. I'm going to go in now to the platform. I'm going to start setting this up. I'm going to show you how we can kind of see what would it look like as a stock. How would I move forward into an option? Let's just see where this can take us. And then we will go from there. Someone help me remember these numbers. 1 penny below 126. We're basically saying entry is good at 132.5. Primary or first target to take some pressure out of the trade, 145. Second up here. Now we're going to do stock. It's $130 stock. Well, let's just assume we're willing to risk around $250. It's going to be a good sized trade. So if you were doing stock, you would probably trade it on margin, maybe just to give you some leverage. But let's just go talk through it and see what's happening. Okay. So let's go to analyze. We're going to Micron. First thing I'm going to do now, I'm not going to take anything for granted. So stop me and ask me questions. Where am I? I'm in a platform. This is the Thinkorswim platform. And what I'm doing is I'm looking to establish this trade so that I can review it before I take it. This is not paper trading, what I'm doing here. This is not paper trading. This is just a simulation, meaning a paper trade means I'm actually going to place it. It's going to go through the system. A simulation is just simply, let's just kind of give it a what if. What would it look like if I did this? Okay. And you'll notice that I have the ability to do that what if for both options and stocks. But if I'm going to do stocks, I'm focused on this line up here. If I do options, that's this information over here. A fake trade, there you go. Fake trade it is. Absolutely. Right? It lets us understand the what if without having skin in the game yet, essentially. So let's set some parameters. I am going to, I'm going to make this our primary target. Our main target was 157 and a half, 157.5. Okay. Now, and you can see that when I hit enter, it locks it in right here. So I can see, oh, okay. That's locked in. Now I'm going to come here and I'm going to go 145. And I'm going to come here and I'm going to go 125.99. These are all the levels on my trade. Here's something cool. Let me show you. Here's Micron. Now, if I go back into Analyze and I click on this, remember this is recorded. You can come back and see. I'm just going to make one big recording because I have to take out like 20 minutes of silence or whatever that was. Ridiculous. But I'll just put one recording out there for today. I can go orders, I can go set slices to charts, and I click on this one square. Boop. What did it just do? It just drew lines. All those lines that I had drawn before with my little colorful squiggles, look at that now. There's the top, right at the top, right at those highs, right where we wanted it to be. Where are we here? Ooh, you know what? That's a little bit, maybe a little high. I might move this down a little bit, maybe to like 143 even. 143 even. Now that I see it, I think I'm a little, why did I do that, you might ask? Right? Why did I do that? Because you'll notice I'm above these two candles. I'm actually going to put my line right at those bodies, right where those two crosses are. So I'm going to remove this drawing. I'm going to go back in and I'm going to say, do it again. Do it again. I want to see these lines again. Okay. Now look how I'm touching. That looks better. That's giving me, now I'm not quite getting 2-to-1, and someone might be like, Scott, you've sacrificed your 2-to-1. I don't get to just be like, I want a 2-to-1. I'm taking what it's offering. And I hope you can see why I say what it's offering to me there, right? Let's see. What's next? Let's go simulate it, right? Let's go back in here. And I'm going to click on this ask price. Bid is to sell. Ask is to buy. When I click this just one time, not a double click, one time, bing. What happens? Comes down here, says 100 shares. 100 shares. Now, I said I want to keep my risk at or below 250. What is my risk now? 668. 668. I'm not quite 3 times higher. Not quite 3 times higher. So I don't know. 35 shares would maybe put this at 250. Let's try it. I'm not even doing anything else. What am I testing? My position size. If I do 35, no, more than 35, let's go 40. 40. 35 is 230. Okay, 40 shares. 40 shares. What do I have? I have risk of 267. What does that mean? That means if I buy the stock at $132.67 and I set a stop loss at $125.99 and I buy 40 shares and then I let's say that on Monday of next week or Tuesday of next week, all of a sudden things start to fall apart in the tech market and it drops. Oh no, it's dropping. What do I do? Well, I have a stop. So if it drops down and it hits $125.99, my stop's going to stop me out. And how much do I lose? $267.20. If it stops right at $125.99, is that absolutely going to? No. Could be $125.75. Could be $126.05. It's going to be close to that, but not necessarily exactly that. That's how a stop loss, which is a preventative order, stop loss, stop from losing, right? That preventative order. Okay. Now, what's next? Okay, well, let's see what's next. Right? Let's see what's next. The next thing that we can do here, now, what can I do? I'm going to place this order. I just got a weird blip on my screen. Can everyone still hear me? Uh-oh. Oh, good. Whew, I thought we lost it. If we lose it, I'm going to keep fighting to get back. I want to finish this trade. I want to look at it as an option too. So if you lose me, give me at least a couple of minutes to try to get back in, please. And then if you do lose me and you drop, I will cut the recording down to one recording. So if this was helpful, you'll be able to go back and watch it again. Okay, so now what? Well, let's just look at an option. If I were going to do an option, how far would I go? I mean, honestly, I would probably be comfortable just 1 month out. So I'd probably go August 2, right? I'd probably go August 2. And right now, implied volatility is pretty low. How do we know that? Because we score volatility every week, and our VIX is low. And if you look here, my volatility is down low. Right before earnings, it was really high. They were really expensive options, and then it dropped, and now it's much better. And now it's much better. Okay, so now what? So now, I'm going to buy an option. I'm going to probably go a little bit out of the money. I'm going to go to the 135. I'm going to go right here. And let's just see what that looks like. Let's just see what this looks like. And I'm going to dial it back to one contract in the beginning. Oh, look how perfect that was. Look how perfect this was. I'm actually going to do both of these maybe for the alert. Just to, look, I'm not saying, oh, this is such a great trade. It's going to be right. This is a trade that meets the rules. Is it going to work? I don't know. Maybe. If it does, I get 3 or 4. If it doesn't, I only lose 1. So I've got some things that make this worthwhile to me, right? So that's important. What am I going to do with this? Well, if I buy one contract, that one contract, here's what's interesting, okay? If you look, this is a very interesting thing about options. And I know you're like, Scott, beginners. No, we transitioned. There's some intermediate here too. Delta. What's my delta? This tells me how my stock behaves. Everyone, it behaves like 100 shares. One contract, 100 shares. Or excuse me, it controls 100 shares, but it doesn't behave like 100 shares. It behaves like 47. What was my other trade? What did my other trade behave like? Well, it was 40 shares, so it behaves like 40 shares. You'll notice how close those two are, right? But instead of buying the stock, 40 shares, $132. 40 shares, $132, $5,280. If you get it on margin, you'll have to pay a little interest, but you're only going to tie up, two of those, $2,600. Or I buy one contract and it costs me $525. Now, what if I'm wrong? Well, this one is going to have, you might think, oh, I'm losing 267 here. I'm only losing 243 here. No, it's actually going to be worse. I'm going to give it at least a week. I'm actually closer to 300 with time decay. You got to factor in time decay, right? In fact, I could probably actually go a little further out of the money and get even a closer delta. Let's say 137. Boom, something like that. That's probably almost the exact equivalent. But, we don't have to be precise. We don't have to be super precise. I would rather stay with what we have. So no matter what I do, it's the same plan. It doesn't matter if I buy a stock or buy the option. The plan is I'm in at 132.60. My first area of a target is 143. But wait, it does matter a little bit. Why? I'm buying one contract. If I buy one contract, I can't scale out, right? I can't scale out. Okay. Is there something else I could do? Sure. I absolutely could go further out of the money. And buy 2 of them. 145. Something like that. And then I could sell one and keep one, right? That's if you were going to do an options trade. You could do a spread trade. With options, there's any number of ways you could trade this and make it so that you could do the risk management that you want, the position sizing. There's a lot of different ways to make sure if you're like, hey, I want to scale. If you want to scale, which means sell some, keep some, you want more than one contract, right? Okay. But I'm just going to leave that for now. I will come back to it for the alert, but I'm going to just do the stock for today. And I'm going to walk through the order. So the first thing I'm going to do is I'm going to create a duplicate order. Now we're in the order management system. Okay. Now I have order entry tools. And I'm gonna buy 40 shares. Now I feel pretty good about the market. So when I think about my take profit, I don't think I'm going to sell half. I'm thinking maybe 10 out of 40. Maybe I'm going to sell just a quarter of the position to lock it in, take some pressure off, and keep the rest. Okay? And I'm going to do it all at once. So I'm going to do a first triggers to OCO. First triggers to OCO. These are one cancels other orders. You can see I need 4 sell orders here. So I need a sell, 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 sell. I need 4 sell orders. Okay? Now, the first thing I'm going to do is I'm going to say I want to buy this. I'd like to get it for 132.75 or below. That's my price. 130.75 or below. Now, I'm going to have a stop loss and a target. And then I'm going to have a stop loss and a target. And each of the OCOs here are connected to each other. They all need to be good till canceled. This is one you're going to have to watch a few times, right? That's why it's happening in the intermediate. Now, my stop is the same no matter what. 126.99. Nope. 125.99 and 125.99. And I have a target. At the target is at 157.50 and a target at 145. I can't sell 40 shares at 145 and 40 shares at 157. So I want 30 of these on this one and only 10 on this one. Now, it might seem like a lot of work to do this. I'm obviously talking through it with you. But what this does is this automates as much as possible, right? The more that I have this in place, the less I have to rely on myself. It's just a great way to have things managed in the beginning. But what I have here is I have a fully fleshed out trade. I can always come change it. So let's say the stock moves up to like 140 and it's getting close to my first target, or 143. It's close to my first target. I don't have to have a stop at 125.99. I can move it to 135.99. I can always cancel and replace the existing stops. Let me show you what this looks like when I hit confirm and send. So I'm buying, and most, if not all, brokers have this type of a advanced order structure. That's the verbiage. So what would you do? You would talk to your broker and say, hey, can you walk me through how to place an advanced order? Can you walk me through OCO orders? Can you walk me through, right? And they can help you do this. You're not on your own. I'm going to keep, once I've exposed you to something like this, now you can come and say, hey, I tried it. I couldn't get it to work. If you can't get it to work, you should show up on Thursday and be like, Glenn, I tried this. It didn't work. Great. Let me see if I can't help out. Now, remember, we're not licensed reps, though. We can give you the generics of how does it work. You're paying your broker. Call them. Make them walk you through it. That's their job. Because if we walk you through it wrong, I'll be like, oh, my bad. I didn't realize. If they walk you through it wrong, they have to make it good. They have to give you money. If you say, hey, help me do this, and they help you and it's wrong and you lose money, they have to give it back. Hold them accountable. I have people all the time like, oh, I don't really want to call. That's their job. They're there to help. They're there to talk to you. They make money from you. Eventually, we hope they make a lot of money from you because you're going to grow your account enormously and make money trading. So let them help you now when you need it, because they're not going to probably help you very much once you don't. So please, 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 with any of these advanced orders, call, ask, make them walk you through it. Be like, hey, I'm on the line. Here's what I've got. Does this sound right? Make them answer. Okay, so buy 40 shares at 132.75 limit. That means at or better limit. At or better. If I don't get 132.75, I don't get in. So I have to reevaluate it if it opens at 132.80. That's 5 cents away. So I'll probably want to look at it in the morning if I can and see. If I buy 40 shares at 132.79, a couple of things are going to happen. First, I'm going to have a stop loss there and there. Now they're different. Doesn't matter. All 40 will sell at the exact same time. It doesn't matter that they're controlled by 2 orders. I have a stop loss at 125.99, limiting my risk to approximately $267, which is in line with my risk parameters of 250. Bam, done. Rule followed. Have I met all my rules? Well, I have an uptrending stock, good liquidity in a leading group that has just made a higher high followed by a higher low, which means it has a setup and it's starting to give me a trigger. I have a stop. I have a target. I have a timeline. I have a ease pressure valve, right? With a trade. I'm starting to automate this thing. These are the steps. These are what we want to automate over and over and over every single time. Can I make sure that I've done all the things that I'm supposed to do? Yes. What else do I have? Well, if it goes up to 145 right here, 145, I'm going to sell. Boo. Wait, what are you booing? I thought that was good. I'm going to sell 10. I'm going to sell 10. I'm going to lock in a gain. It's not a huge gain. $12 a share 10 times. I made 120 bucks. $120 of profit. Now what? Well, I have 120 and I'm probably going to tighten my stop loss to like 135. So now the rest of it's going to make me at least another 100 bucks. And now this trade's going to make me $200 at least. And then I'm going to go forward. Right? And then if it gets up to 150, 152, then I'm going to start tightening my stop like $3 away. If it gets to 150, my stop's at 147. 146, 147. If it gets to 153, I'm at 151. Like a noose. The higher it goes, the tighter it gets. And if I end up, let's say I end up getting out at 153. We'll pop it in like a ghost. Boo. Oh, that's what she was doing. Got it. Sorry, I boo people a lot. I boo my kids. I'm like, boo. So I'm like, oh, is someone booing me? It's karma. It's karma. Okay, so if it gets to 153, well, 153, I'm up $20 a share. Right? Now the other 30 shares, if it stops out at 153, 151, I'm making 1820. That's 550, 600 bucks plus the original 120. Now I've booked 500. Now I've booked $700 off of a 260 risk. Mission accomplished. Well done. That's it. What if it doesn't? What if it only gets a certain way? Well, if it only gets halfway there, then hopefully we keep as much as we can along the way. We're going to be water. We're going to adapt. I'm going to go ahead and send this order because I want us to keep looking at some of these, right? I think I'll probably put an alert out for these same parameters for tomorrow. Now if you go here into this monitor tab, okay? If you come in here to the monitor tab, here's my order. Now you'll notice I actually have an AVGO order doing the same thing. Here's a stop at 1570 and another stop at 1570. Here's a target at 1735 and 1850. And that's working. That's making money. I'm going to start thinking about it, moving the stop up soon and taking risk out of the trade. Now I have this one. Buy it. Working order. 132.60. If I get this, you know what, Sandy? I had trouble too. There's like a 20-minute delay. I couldn't get on, couldn't talk. Nothing worked. So when you hear, I'm going to delete it when I process the recording. But yeah, we had some issues. Everyone who stayed around, pat yourselves on the back. Those of you who had to drop, I get it. Hopefully you listen to the rest of it on the video. Is this helpful? Is this the right stuff, beginners who are saying, I want a beginner session where I can just walk me through a damn trade, Scott, from start to finish, over and over again. What should I be thinking about? What should I be doing? How should I be doing it? Because if it's not, I want you to go into the suggestion box. And I want you to write me a suggestion. I've got to stop at 125.99 here and here. I've got a target at 145. I've got a target at 157.50. It's all in place. That's all I have. Now I just manage this trade. If I can only look at it at night, then I can come in at night and I can do a cancel and replace. Cancel my order, replace it, boom. I can say now I want my stop at 132. Now I want my stop at 135. Now I want my stop. How am I going to make that decision? I'm going to come in here. I'm going to go to these Heiken Ashi candles. I'm hopeful this is the last red candle, and then it turns into the white candles. And when it turns into the white candles, I move my stop. And as they continue to rise, I move it, 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 and I keep on moving it. If I've gotten to a certain point where I like my momentum, I might switch to a 4-hour in order to protect more. There's a lot of different techniques that we can use. Why not use I believe you mean a trailing stop. I believe you mean a trailing stop. And it's the same theory. It's the same theory, but it is, I'm just manually adjusting, right? A trail stop is automatic. You're going to have to, I think I just need to uninstall and install. I checked my internet. It's fine. Okay. We're going to finish this before we wrap up. The recording will be much better. The question was, why not a trail stop? So let's talk about a trail stop. A trail stop, I'm going to set a distance, $1, $2, or a percentage, 0.5%, 1%. And it's going to stay exactly that same amount every single day. Exactly. But Heiken Ashi doesn't function that way. Heiken Ashi is going to start a little slower, and then it's going to start to speed up a little bit. Sometimes it just whips around, right? But I prefer to make my adjustments with a volatility perspective. And that's what the Heiken Ashi does. So I prefer, the only time I personally use a trail stop is if I've reached my primary target. 157.50, it's getting close, and I think to myself, you know what? This thing could still go. So I'm actually only going to sell 20, not 30. And on the other 10, trail stop. I'm going to give like $1.50 and let it go. So now let's say it gets to 157.50, right? So this is how a trail stop works. 157.50, my stop is at 156. If it goes to 156, my stop's at 158.50. And if it never goes higher, then it comes down. It's locked in at 158.50. If it goes to 161, 169.50. It's always $1.50 away, which at the end of a trade is fine. But early in a trade, when there's more whipsaw, I don't love it. That's my reason. Other people might have a very different reason. So it's not wrong or right. It's just a matter of personal preference. Does that make sense? So I love the idea of moving my stop. It's like I'm climbing a tree. I want my safety. And if I climb a tree, I get 20 feet up and I have a safety net 10 feet away. That's fine. If I get 50 feet up and the safety net's still at 10 feet, that doesn't feel that safe. And there may be times where the tree is a little shaky and I'm like, you know what? I'm going to put the stop a little closer here. And then if we get past this, I'll ease it up a little bit. Right? Like, that's fine. We have discretion in that regard. So there you go. Okay. Now what? We had a setup, a trigger, a stop, a target, a reward to risk ratio, a time frame, a pressure release stop, a position size. We have an order with automation. We've started talking about some techniques with Heiken Ashis to tighten stops, to take risk out of the trade. When can I sell some? Look at how many things we've done. We haven't even placed the trade yet. Proactive. This is Professor. The professor is at the computer. There's no chimp here. Where's the chimp? That chimp's in the cage. There's nothing emotional here. We're not like, oh, I hope this, I hope. It is what it is. I have presented you a business proposal. Yeah? You get to look at this business proposal and you get to evaluate. Do you agree that there's enough probability of success that you like it? Well, it's a good stock. It's in a good trend. It's at a support level. There's a lot of technical things that I think add probability to it. That's helpful. My skin in the game is controlled. I controlled it. It's at an acceptable level, and I've justified it. I'm getting 3-1, 4-1. I don't have. Can I be right 50% of the time? I think so, but I don't have to be. It's not always like, hey, do I think this is such a great trade and it's definitely going to be right? No, that's not at all what I think. I don't think that at all. If you say, Scott, do you think this is such a great trade and you're so sure it's going to be right? Nope. Based on my record, I'd say it's got anywhere between a 45 and a 55% chance of success. And that I would expect that if I'm right, I'm going to get 2.5 to what I'm wrong on it. That's what my numbers tell me. Fair enough? Acceptable? Because that's the best we're going to get, right? There's no people are like, well, how do I know I'm going to be right? You don't. You don't. All you can do is take that trade, manage it, adapt with it, be water with it. If it keeps running, let it run. If it starts to go and then stalls, be patient. If the market starts to turn around and this starts to turn around, well, that's a different story. And now we're going to say, hey, you know what? Let's cut our losses short. Let's get out. I put a stop loss on. That's like putting a seatbelt on. I get in the car, put my seatbelt on. But if I'm driving down the road and all of a sudden I'm like, oh my God, I'm heading straight for that tree. I don't think, well, that's okay. I have my seatbelt on. I think, well, let's hit the brake. See if I can't stop first. And if I can't stop, let's jerk the wheel and see if I can avoid it. And if I can't hit the brakes and I can't jerk the wheel, now I've got my seatbelt on. That's how I want to trade, too. Are you picking up what I'm putting down? Are you eating what I'm cooking? Yes? Are you smoking what I'm rolling? I don't know. What's the right analogy here, you guys? Or metaphor? Kevin says no. No? What are we missing? Where's the disconnect? Or is it just repetition? No smoke. All right, are you eating what I'm cooking? Because it smells good. It smells like 3.8 to 1 to me. Not always smells right. Steak. It smells like a filet, medium rare, with just a hint of garlic and butter to finish it off. All right. Listen, thank you, all of you. Thank you for your patience today. I don't know what happened. I've never had that go with Discord, so I'm going to look into it and see if I can't determine it. You stuck with me. I hope it was worth it. I feel like this was a good conversation to have, to walk through start to finish. I feel like this is going to turn into a trade. A winning trade? I don't know. Let's see what happens, right? Let's see what happens. I will post the recording. It's going to take me a little longer than usual because I got to get in there, find all the dead spots and delete it so no one's sitting there listening to the recording that way. But if you find like, hey, this was a helpful start to finish, great, bookmark it. Bookmark it on YouTube or whatever you need to do. Yes, and then we'll do more of this tomorrow. Glenn will be here for 45. I'll come in the next 45. We'll see if this order filled. We'll see if there's anything else we need to do with it. We'll see if there's another trade. Right? I'm hopeful that this type of a routine with these is what you need to help get on the train. Morning and evening tomorrow. Double whammy. It's a threefer. I'm going to be here in the morning at 15 minutes before market opens. Glenn's going to be here at 1 o'clock. Unfortunately, the market's going to be closed because it's a half day. I totally forgot. I think it closes at 1 Eastern. But that's what his schedule is there for. So he's going to come in. What does that mean? It means that if you're the only one who shows up, it's like a free coaching session. You get to just pick his brain. If nobody shows up, he's going to just be in there answering questions and whatnot. There you go. It closes early. Thank you, Kevin. And then, so Glenn will be here from 3 to 4 Eastern. Market will be closed, so make sure you're closed down with whatever you're going to do. But he will chat with you. I'll check with him about last one, and then Thursday, and then tomorrow night, 8 to 9:30 p.m. Eastern time. It's good to see everybody. Like I said, you're amazing for sticking around, you guys. I will make sure that something like that doesn't happen again. Have a great rest of your night. And as always, happy trading.